In 2005, billionaire investor Masayoshi Son sought new ways to grow his wealth, despite already possessing $4.3 billion. But not everyone crumbles under such pressure. During this time, a figure known as BNF gained recognition through a remarkable JCOM trade. He became a Japanese legend, celebrated as the JCOM man. Yet, to BNF, it was merely one trade. His life consisted of simple pleasures, cup ramen, anime, and the solitude of day trading from his room. Even after earning a great 2 billion yen from a single trade, BNF's drive remained unaltered, always seeking the next challenge. As he navigated newfound fame, an impending global bear market threatened the big financial bubble of his lifetime. Recognizing the need to cut through the noise, BNF adhered to his unorthodox anti-establishment approach. He refrained from seeking favor from those with deep pockets and established connections, instead choosing an unpretentious, unprofessional trading setup within his modest apartment. This approach symbolized BNF's deep trust of the prevailing financial system. This is the incredible true story of how a broke Japanese college student turned a small sum of $13,600 into an astonishing fortune of over $153 million in just 8 years. Let's go back to where it all started. Back in 1986, in the bustling city of Osaka, a young BNF was leading a life that felt somewhat monotonous. Spending most of his days indoors, it seemed like a routine existence. But then, an unexpected blessing came his way, and suddenly his world became a lot brighter, adding in him the belief that one could outsmart the system. BNF was experiencing the typical college life, filled with experimentation and soul-searching. His daily routine consisted of indulging in ramen, anime, and sake. Little had changed until that one fateful day in 1998. It was then that NHK, a famous Japanese TV network, aired a 4-part series searching into the world of finance. The first episode, intriguingly titled The Man Who Lost 50 Million, chronicled the life of the legendary hedge fund manager Victor Niederhofer, a man known for his speculative prowess and his fund's roller coaster journey through the world of options on index futures. This TV series, in particular, left a profound impact on BNF. It stirred something within him, igniting his passion for the world of finance, trading, and the lifestyle it offered. In fact, he was so inspired by the documentary, Victor Niederhofer's life, and his trading acumen that he even based his trader name, BNF, on Niederhofer. The allure of trading and the freedom it promised resonated deeply with BNF. This was the life he had always dreamed of, but there was a stark contrast. BNF wasn't born into privilege. At that time, he was just a broke college student. The prospect of amassing savings to begin trading seemed like a distant dream. Learning about trading was equally daunting, especially without the vast resources available today, like YouTube. In the 1990s, Japan had limited resources and textbooks on trading, particularly trading via a computer. There was a scarcity of information, but none of this deterred BNF. The excitement of potentially making millions through trading consumed him, and he was captivated by the intricate world of stock charts. Despite the odds stacked against him, he was resolute about becoming a day trader. During his college days, BNF undertook part-time jobs, working tirelessly on weekday nights and weekends. Aside from covering his rent and cup noodles, he saved every penny he could. In the gaps between college lectures and work shifts, he devoted every available moment to studying charts. Day in and day out, he analyzed price movements, observing the ebb and flow of stocks, particularly those within the Japanese Nikkei index. Over time, he started to discern patterns and meaning within the intricate dance of stock prices. In the absence of readily available information, he embarked on developing his own theories about how the market operated. BNF committed himself wholly to this endeavor, sacrificing his time and social life. After 2 years of relentless effort, working part-time jobs and immersing himself in chart analysis daily, BNF had scraped together $16,000. The moment had arrived. He was ready to confront the markets, armed with youthful enthusiasm, determination, and discipline. However, the market he encountered was far from forgiving. As history tells us, in the year 2000, the global stock market was reeling from the bursting of the internet bubble, also known as the dot-com bubble. Yet, what many might not be aware of is that Japan had already endured a significant asset bubble burst in the 1990s. This period, often referred to by Japanese economists as the lost decade, witnessed asset prices plummeting by over 70%, leading to a decade of profound economic distress. BNF, after 2 years of chart analysis, faced initial losses in the trading world. However, these setbacks led him to develop a straightforward yet brilliant strategy. In a bear market where fear dominates, people tend to oversell declining stocks, fearing further losses and underestimating short-term recoveries. BNF's strategy was known as contrarian trading. He observed that during bear markets, traders often panic and sell off stocks that deviated at least 20% from the 25-day moving average, with 35% considered a safer buying point. Prices would then rebound, allowing BNF to close trades with profits. But this strategy wasn't a guaranteed success. BNF encountered more losses than wins, causing his savings to dwindle. He realized that some market sectors posed greater challenges. Despite the setbacks, he understood that achieving overnight success was unlikely. So he concentrated on understanding his losing trades. Through a careful study of losing charts, BNF identified repeating patterns in specific sectors with varying deviation percentages. He noted that different sectors had their own deviation ranges from the moving average. For example, 22 to 30% for service sector stocks, 25 to 45% for post-dot-com crash IT stocks, and 28 to 60% for emerging stocks. By applying sector-specific percentages, BNF improved his timing and entry points during temporary market upswings. This required him to develop a keen sector awareness before market trades. With dedication, BNF began to achieve more wins than losses. However, by December 2001, the bear market grew even more turbulent, with a significant crash in penny stocks resembling a market-wide sale. BNF's friends from the two-channel community saw this as a golden buying opportunity, but BNF's instincts told him otherwise. Instead of buying everything in the midst of a fire sale, he focused on stocks that had dropped significantly more than the market average, with deviations close to 65% off the 25-day moving average. His decision paid off as the selected stocks rebounded within a short span, with some even doubling in just a few trading days. BNF's disciplined approach and his deep understanding of market dynamics yielded fruitful results. Had BNF followed the conventional path and bought stocks at typical levels like his friends, he would have suffered catastrophic losses. Instead, by the end of 2002, BNF had impressively grown his account to $1 million in US dollars. He had transformed into the prominent bear among Japanese day traders, and the thrill of his success was exhilarating. He was finally able to sustain his life through his trading. However, a great tragedy loomed on the horizon that would drastically alter BNF's worldview. It was a peculiar tragedy, considering the entire world was experiencing a massive bull run. While everyone else was ecstatic, BNF was feeling an overwhelming sense of stress. The tragedy, as it turned out, was the transition from a bear market to a bullish one. You see, BNF's trading strategy thrived in a bear market where fear prevailed, and his approach was tailored to such sentiment. But now, the market dynamics had flipped, and he found himself facing an entirely different approach. To continue making a living through trading, he had to figure out how to navigate and succeed in this new bull market. Adding to the stress of the situation, BNF now had a big amount of money in his pocket, and he was determined not to jeopardize the freedom he had earned. To minimize the risk of losing his hard-earned wealth, he knew he had to devise a system that could thrive in the current market sentiment. Drawing from his past experiences, BNF recognized the important role of market sentiment. To mitigate risk, he made a strategic decision. Rather than opposing the bullish sentiment, he aimed to create a trading strategy that would benefit from it. After all, in a bull market, holding on to stocks over the long term typically yields profits, but that approach didn't align with his day trading strategy. Instead of adopting a long-term hold strategy, BNF utilized his deep understanding of codependency within the Japanese market to clearly position himself to ride the wave of the bull market. When the market is bullish, core companies tend to rise along with the overall index. However, BNF recognized an intriguing pattern. Even in strong markets, not all core companies surge simultaneously. There were always some laggards, and that's where he saw opportunities. He would strategically invest in these lagging companies, riding their upward momentum for a few days or weeks before selling. Since these opportunities didn't present themselves every day, BNF transitioned to a strategy that involved just a few trades each month. Instead of forcing trades, he patiently adhered to this approach. Through years of experience, BNF had developed a unique perspective on trading, viewing it not as individual price actions, but rather as a part of a global, interconnected system. His unemotional discipline was the cornerstone of his success. This strategy proved exceptionally fruitful during the bullish market, and BNF's account grew by $10 million over 2 years. However, the story took a peculiar twist. It was December 2005, 9 a.m., on another typical morning at the Japanese stock exchange. The trading floor buzzed with excitement as several new tech companies had recently gone public, sparking traders' hopes of finding the next unicorn. But this morning, all eyes were fixated on a new stock, JCOM Holdings, making its debut on the emerging markets. Within minutes, panic engulfed the trading floor as JCOM appeared to be experiencing one of the most significant stock drops in history. Traders were baffled and hesitant to buy, fearing potential financial fraud. The internet erupted with discussions on this unprecedented event. Meanwhile, at Mizuho Securities, one man was grappling with a nightmare of his own. He had committed an unimaginable error. His job was to sell a single share of JCOM at 610,000 yen, but instead, he accidentally sold 610,000 shares for a mere 1 yen each. Once the trade went live, there was no turning back. Fortunately, the Japanese exchange had measures in place, such as limit up and limit down rules, restricting how much a stock could move in a single day to prevent extreme volatility. However, these measures proved insufficient. BNF swiftly seized the opportunity. In a matter of minutes following the incident, he made his move, purchasing 7,100 shares at the limit down price, securing an astonishing 49% stake in the company. He placed half of his entire account size on this audacious trade, and his protege CIS followed suit. Panic continued to escalate, and Mizuho Securities found themselves unable to reverse their erroneous trade. In a desperate bid, they attempted to buy back as many shares as possible, but they were not the only ones in the fray. Even institutional investors had caught wind of the situation, and demand for JCOM shares surged. The stock's price began to soar as the market approached its closing hours. CIS cashed out his profits and went as far as withdrawing the money from the bank, fearing potential government repercussions. However, BNF, unlike his protege, remained remarkably calm. He opted to take a calculated risk, selling only a small number of shares. He was worried whether he would face a substantial loss, potentially jeopardizing half of his account size by holding 6,000 shares of JCOM overnight. The big question was whether BNF would face significant losses or amass a colossal fortune overnight. While most traders would have been extremely stressed, BNF remained remarkably calm. To him, this was about more than just money. It was a game, and he believed his opponent had made a major blunder. The next morning, amid all the chaos, it was revealed that trading in JCOM stock had been halted. Large institutional players, concerned about potential legal repercussions, decided to return their shares and profits to Mizuho Securities. However, rogue traders like BNF stood their ground, refusing to sell. As time passed and the government showed no signs of intervening, Mizuho Securities had only one option left: a settlement. Mizuho agreed to repurchase the shares held by rogue traders at the expected morning price of the stock. Just before the halt, this opening price had been set at an incredibly high figure of 975,000 yen. BNF reaped an astonishing profit of approximately 2 billion yen, making it one of the largest profits ever earned by a bedroom day trader. His story grabbed headlines, and he became known as the JCOM man in Japan. Niche trading communities hailed him as a trading god, and even billionaire investor Masayoshi Son took notice of his extraordinary success. Despite the high-risk nature of his trades, BNF had appeared victorious and achieved legendary status. At this juncture, he had to decide whether to go professional. He had attained a comfortable and stable lifestyle doing what he loved. In an interview, he mentioned, "I don't enjoy taking money off the market. Seeing the physical amount of cash makes me fearful of how much I'm putting on the line in trading. It makes me a worse trader." BNF soon realized that he disliked the attention and fanfare that came with his newfound wealth. While the money offered a comfortable life, he had no desire to indulge in extravagant travels or high society living. He preferred the simple pleasures of sharing a drink in town with friends. He believed that excessive spending took away from his love for trading. What truly mattered to him was the art of trading. As BNF strived to maintain his modest and contented lifestyle, the markets were changing, and a familiar storm was brewing on the horizon. Little did he know that this would be his most challenging test yet as he faced the emergence of a new bear market. It led him to return to his tried-and-true strategy, and even Japanese news outlets were covering the crumbling U.S. banking system. This was a major event, but BNF had been researching it for months. On September 13, 2008, he made a similar move to the one he made with JCOM, investing $6.5 million in Lehman Brothers stock. That year, Lehman's stock had plummeted by 73%. Japanese banks were considered safe and conservative, while Lehman Brothers was the fourth largest investment bank in the U.S., known for its strong reputation. BNF believed that a rebound was inevitable, but he made a critical mistake. He underestimated the level of corruption in the U.S. banking system and overlooked the fundamentals. He had broken his golden rule. The $6.5 million investment went to zero overnight, causing him much pain. After suffering such a painful loss, BNF vowed never to trade the U.S. markets again. However, the storm was far from over. The crash of the U.S. housing market led to a global financial system collapse. For bear market traders like BNF, times of crisis presented opportunities. On October 10, 2008, sensing an opportunity, BNF saw blood in the water. The global financial system was in turmoil, and the Japanese markets, including the Nikkei 225 index, were taking a severe hit. The Nikkei had fallen, and BNF believed in the potential for a rebound. Following his old principles, he bought in. The markets continued to move against him, and as the market closed, he faced the decision. Should he cut his losses or hold his position overnight? Relying on his past successes, BNF chose to hold. However, the Japanese markets deteriorated further. In 2008, Japan was hit hard by the global financial crash due to its heavy reliance on exports and trade openness, especially to Western markets, which were now buying fewer consumer products. Japan had also become more susceptible to stock market shocks due to its increased trade openness. The next morning, BNF woke up to a sea of red numbers. His previous deviation targets no longer seemed effective. The index kept dropping, and BNF was on a losing streak, heading towards significant losses. While many traders might have reacted emotionally and desperately tried to recover their losses, BNF remained calm and disciplined. He focused on cutting his losses short, but the hits were starting to add up. He had to go back to the drawing board and adjust his strategy. BNF understood that timing the bottom was impossible for anyone, and he believed in his strategy, which involved gradually increasing position sizes based on the 25-day moving average deviations, tailored to different sectors. After careful analysis of the market, he recalibrated his deviation targets per sector of the Nikkei index. On October 27th, the Nikkei continued to fall, and BNF attempted another rebound. The market, however, continued to move against him. As time passed, the weight of his trades grew heavier. Watching anime to calm his mind, which had worked in the past, no longer had the same effect. He wondered if he had become too comfortable. On that day, he realized his greatness didn't solely stem from his strategies, but also from his ability to filter out the noise and maintain discipline while developing his deep understanding of the market. Rather than second-guessing himself in his vast experience, BNF decided to double down on his trading strategy. As the market remained against him throughout the morning, he went on a buying spree, taking diversified positions in many of the hardest-hit companies that constituted the Nikkei. His overall position grew to $64.8 million, spread across over 90 companies. After the lunchtime close at the Tokyo Exchange, a few top names began to rally, slowly lifting the Nikkei. This positive chain reaction spilled over to more of BNF's positions before the market closed. Confident in his understanding of the markets, BNF chose to hold his position overnight. The following morning, the market continued to rally, and that's when BNF started to unload his position, yielding a profit of over $12 million. BNF had once again ascended to godlike status, revered as a trading deity among Japanese traders. In the past few years, BNF has diversified his portfolio, investing in 2 commercial real estate buildings. Commercial properties tend to have longer-term tenants and offer favorable tax incentives. Real estate is also a reliable hedge against inflation. Although he sold one of his properties, his primary focus remained trading. With no sign of changing his lifestyle and his remarkable growth, BNF was on a mission to become the world's first billionaire bare bedroom day trader.